Everyone, this is Kishore. Welcome back to my channel. Today, I'd like to do stock market short-term trend analysis, and also I'd like to share what are the tail and headwinds for the next 3 months. And I'll share one specs chart for the long term. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. So on September 25th, we got GDP, and it looks like very good. US economy notches fastest growth pace in nearly 2 years in second quarter. So the GDP came very well, and market also reacted positively on that side. And the GDP consists of goods, services, and other. Even though the goods part is only 30%, 32% in the GDP part, but it impacts more in the S&P 500 earnings more than 60%. So let's see how the goods in the latest report. So this is the percentage change from preceding period in real GDP, and the goods section. If you see from the quarter one to quarter two, from 0.22 it went up to 2.2, and for the services 0.8 to 2.6. So both goods and services went up crazily upside, so that helped it. But if you see in the import side, the goods is first quarter 52 and the second quarter is minus 35, means the imports on the goods fell down a lot, and how it impacted the GDP. So if you see how the GDP is calculated, GDP equal to consumer spending plus investment plus government spending plus exports minus imports. So they'll subtract the imports from the GDP. So as we saw, the imports went down, so that helped the GDP to boost parabolically high. So technically, that in downside of the imports helped the GDP to get a very good support here. I mean, very good output. But let's see how it is going to be in the Q3. And if you see here, annualized change in business and consumer spending, this is till June 30th of 2025, second quarter of that 2025. Business spending is falling down like anything, and consumer spending rising up. So this is not a good sign. And we know that there are a couple of reasons for this. One is tariffs and other inflation and all that stuff. But whatever it is, business spending going downside is not a good sign. So that's the reason I'm saying how it is going to be in the Q3. And this is seasonal chart, presidential year one, first year of the presidential year on the monthly returns, and the second term of the presidential year of the Republicans. Like September, August, September, October, both 3 months are the bearish months, but we got very good month of August and also very good month of the September. So we only be left over the October. So there is a high chance if it goes down, it can go down in October, and November and December seasonally are bullish. And if you see this S&P 500 average performance per day, this is from 1950 to 2023. The August is a little bit bearish compared to September and October, but in October, third week of October is bearish to me, and especially on 19th October, 9th looks a little bit. Throughout the year, this is the bearish day. So maybe in the third week of October, we may see a little bit downside. What would be the possible headwinds? Why it can go down? So this is a buyback blackout periods list on the from October 8th. This is from October 8th to October 24th. So there is a blackout period of the buybacks. So that would be one of the reason why market can go down in the month of October, especially in the second and third weeks. The reason is buybacks is a very good contribution to the S&P 500. If you see here, 27% of S&P 500 returns since 2011 are driven by buybacks. So it's a huge contribution to the S&P market, S&P 500 to go up. And if you see here, S&P 500 executed buybacks from year 2002, it going like anything, and especially in 2025, more than 1 trillion on the y-axis, it is in the billions. So like more than 1,000 billion, which is more than 1 trillion amount of buybacks happened in the year of 2025. That helped the market to go up like anything, even though September, August, and September bearish months. So market went up, means there is a strong upside momentum on the last 8 months or last 10 months. So that's one of the reason why the market went up. And if you see here, November and December are historically the strongest buyback execution months for US corporates. So both small cap Russell 3000 and also S&P 500. So November and December are very good months as a buyback. So that's the reason, one of the reason it as stock market is bullish, seasonally bullish in the month of November and December. And now coming to the weekly chart of the SPY, so we hit 673 and a little bit of down from 673. Looks like it is good to me. RSI is also going up above 70, little bit of forward, but there is no negative divergence here. So if market goes down, then 646 acts as a very good support. As we saw, second and third week of October, a little bit bearish, and with the blackout of the buyback period. So if it comes down, then 646 acts as a very good support. If it breaks, then 627 acts as a good support. And this is QQQ weekly chart. We hit 608, and again the RSA is positive, and there is no negative divergence. Market is strong momentum upside, and if it comes down, 579 acts as a very good support. If it breaks, then 559. And this IWM weekly chart, again the same. RSA is having strong momentum upside. There is no negative divergence and no weakness in the momentum upside. And if it goes down, then 229 is the good support level, and 237 also acts as a very good support level. So based on the buybacks blackout period only, there is a high chance it can go down. If not, then it may go up from current levels. And this is the chart. It's a monthly chart of SPX from year 2007. There are various reasons, and where are the couple of things acted as a tailwinds to go market go up like anything from year 2008 to the 2025. So I put few things. It's not just US macro, it is global macro helped the market to go up. So I'll share this. I'll talk about this single chart in a separate video, and are the whatever the factors helped market to go up in last 15 years, does it intact now, or are there any changes on these tailwinds? Are they become the tailwinds to the headwinds, or the tailwinds still intact or not? I'm going to share in my one of the next videos. And another thing is like foreign holdings of US financial assets, allocation to equities. So foreign holdings on the US equities is going up. So like anything from year 2012, I think 2011. So we'll talk about this both charts in my one of next video, probably next week or some other time. I'll make that video, and then that is going to be very interesting. And the summary is blackout period of buybacks in October might pull market down, but based on strong November and December buyback seasonality, mostly it would be a buy the dip opportunity. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please share this content if you any of friend looking similar kind of content. Thank you so much. Bye bye.